I'm Anabel González, non-resident senior fellow at the Peterson Institute for International Economics, and I am very pleased to welcome you to TradeWinds, our bi-weekly virtual event series where we discuss the future of global trade in the era of the COVID-19 pandemic with leading policymakers and experts from across the world. TradeWinds episodes normally run the first and third Wednesday of each month. And we are very grateful that we have a large and diverse audience spanning now over 80 countries from across the world. I am halfway my goal of reaching participants in all 164 members of the WTO. Today, I would like to recognize our viewers from Latin America and the Caribbean, which so far have come from 20 countries, from small countries like Antigua and Barbuda to larger countries like Mexico and Brazil, spanning Central America, Colombia, Chile, Peru, Uruguay, Venezuela, Argentina, and others. So thank you very much for being with us. In this, our seventh episode of TradeWinds, we will explore the topic, how can Latin America and the Caribbean help shape the global trade and investment landscape to recover from the pandemic? A theme that highlights the importance of the trading system for middle-income countries' growth and development prospects. To lead our conversation today, I am delighted to have with us two great speakers. Let me first introduce Carlos Felipe Jaramillo, who is Vice President for Latin America and the Caribbean at the World Bank, where he oversees a 32 billion portfolio. Felipe has a very distinguished career at the bank, spanning almost 20 years. He comes originally from Colombia, where he also served in a number of important positions in the government, including in the Ministry of Trade. And I'm almost afraid to say that I first worked with Felipe on trade in the Americas back in 2002. Our second guest is Barbara Kotschwar, who is Senior Director at Global Government Relations at Visa and also a professor at the Center for Latin American Studies at Georgetown University. Barbara is also a distinguished alumni from the Peterson Institute, where she worked as research assistant for over 8 years, and also a former World Bank colleague. Barbara is another trade veteran from the region, having participated in the negotiations of the free trade area of the Americas back in the late 1990s. So welcome to both of you, Felipe and Barbara. Thank you very much for being here with us at TradeWinds. And I will turn it over to you in a moment. Let me just remind our audience to please get ready to submit your questions using the Q&A feature in the platform, and we will try to get to as many of them as possible. So let me say a few remarks to frame our conversation. The coronavirus is significantly impacting Latin America and the Caribbean. The region is expected to contract 9.4% this year, according to the IMF, and it could well take until 2023 to return to pre-pandemic levels. For 2020, trade volumes are expected to decrease from last year by some 25%, while foreign direct investment flows may be reduced by about half. So these are some of the most severe impacts of the pandemic in the developing world. And even as production and trade structures across countries are different, LAC will need more trade and investment to recover. As the pandemic reshuffles supply networks across the world and changes production and consumption patterns, it may also open new opportunities for the region to attract more foreign direct investment, to further integrate into global and regional value chains, and to increase its participation in digital cross-border commerce. Strengthened global trade cooperation is necessary for LAC to leverage potential opportunities and to protect itself from conflicts and geopolitical confrontations. In a region of mostly middle powers and small countries, a well-functioning rules-based trading system is key. LAC needs the WTO to guarantee a level playing field for its agricultural exports, for example, but also to develop new rules, sort out trade conflicts, and increase transparency and business certainty. It could also play an important role in improving LAC's access to medical products necessary to fight the pandemic. So bilateral and regional trade integration could also expand opportunities to foster regional value chains, bring in more investment, and create jobs. Recent trade agreements, maybe like the USMCA or the EU-Mercosur agreement, could serve the purpose and also spur institutional and policy reform. But there are more opportunities to deepen policy cooperation, including through intra-regional trade. So let me now turn it over to you, Felipe and Barbara. As we see the virus casting this severe blow to Latin American Caribbean countries, we know that trade and investment can play a role in the region's upturn, but LAC economies will also be significantly impacted by the slowdown in their main trading partners, the US and China. The global trading system is challenged, as I was mentioning, and regional integration is low, while countries in the region also face their own competitiveness constraints. So Felipe, let me start with you and ask you, how do you think Latin America and the Caribbean can leverage trade and investment to recover from the pandemic and to rebuild more diversified and resilient economies? And again, thank you very much to both for being here with us at TradeWinds.
Thank you, Anabel, and thank you very much for inviting me to this conversation. So, so you ask an interesting question. Let me make a couple of points on that from a perspective of somebody who's coming back to work in Latin America after a number of years. So, sort of looking at the region fresh. So let me give you a couple of messages. So, message number one is from our standpoint, looking at the numbers and what has happened. This crisis is massive. You know, some of us at first thought this would be a temporary blip. It would, you know, it would come, it would go. We'd find a cure, a vaccine, something. It has not happened. And the combination of external factors, you know, affecting trade, affecting prices, and the internal factors, policies in which governments have, you know, restricted mobility, restricted people's movement, and the citizens' own fear of catching this virus and going out, and it has really created a perfect storm of conditions, both from the external and the internal side, to create what is now clearly becoming the largest recession on record for just about every country in Latin America. Since we've been keeping records in about the 1900s. So at least 120 years, this is by far the worst. And I'm particularly concerned because our preliminary estimates in the bank is that poverty numbers are getting worse by the day. We're estimating right now, unless a miracle occurs in the last few months, that over the year we're going to accumulate at least 50 million more Latin Americans sliding in under the poverty line. This is a disaster because this is more or less the number of Latin Americans that have climbed out of poverty since about 2003. So we are losing nearly 2 decades of progress on that front. We are forecasting right now, although our forecast is uncertain and continues to change, that the region will, the GDP will shrink by at least 7%. I think we need to revise that. I've looked at the recent numbers that came out of Peru, came out of Colombia, but the second quarters of the year, minus 15, minus 16%. Peru just released numbers on employment that show that something like 40% of the population has lost jobs. It is really something that is just overwhelming and more massive than any of us could have anticipated. And it has terrible implications also, and not just for poverty and employment, but also for the private sector. Many companies are going bankrupt, are facing, if they're not going bankrupt, they're facing serious financial difficulties. Governments are trying to do what they can, but many of them have very limited means to do the kinds of fantastic job protection programs and company protection programs that most EU countries, the US, and the rich countries have been able to do. Most Latin American countries just don't have those kinds of resources. So this is a very different crisis to the global financial crisis of 2008, 2009. That actually is beginning to look tiny in comparison to what we are facing now. So that's message one. This is a massive crisis, extremely worrisome from all angles. The second message I wanted to pass on this is that I think this is a time, an important time for the region to rethink a bit its future. This is something that I'm coming in fresh from the outside. I really, looking at the numbers, have been very disappointed with the record the last 6, 7, 8 years. It really has been an almost lost decade for Latin America since about 2011, 2012. Growth region-wide has been close to zero. Most countries have just been grappling with a lot of malaise, lack of consensus, very few reforms, very little moving forward. And I feel like, we all recall that fantastic decade that started in about 2001, 2002. Commodity prices were high, trade flows increased, and poverty numbers finally budged, and there was a sense of optimism, and that things were going very well. But now looking back, it is very clear that a lot of that was externally motivated. It really had a lot to do with external factors. We were just kind of lucky that our commodity prices went up, and we just reaped the benefits. But once they came down, it's most up to the economies themselves, the governments and the civil society, to come up with consensus and move forward reforms. And there has been very, very little of that to continue to adapt to a changing global economy. So I think we cannot, I'm very concerned when I hear that it's important to get back to where we were before the pandemic. I think the countries really need to think of a new growth path, a better growth path. It needs to be more dynamic. We cannot go back to those meager growth rates of the last 8 or 9 years. We should not go back to economies that are mired in mediocre results. And I think it is a chance. Yes, it's a crisis. Governments are busy. Everybody's looking at the very short run, but I think most crises do have opportunities. And I think this is an opportunity that smart governments and smart countries should be able to come up with a list of things. Look, we need to go to a better future, more dynamic, more energetic. And in all of that, and I get back to your question, both trade and investment are absolutely critical. Unfortunately, I think most of us know, has not been very dynamic in latching onto the opportunities of global value chains and the more dynamic parts of the trade agenda of the last 20 years. Only perhaps Costa Rica, Mexico, a little bit Chile, but most of the countries did not really take advantage of these opportunities. So I think there's a moment to rethink that strategy. And on the investment side, what I would say is, look, in wealthy countries, the stimulus packages are massive, and maybe the stimulus packages will lead the way to recover. That will not happen in Latin America. Latin American countries, most of them already have daunting debt levels. And it is really hard to think that a government-led stimulus package is going to lead to recovery. Hence, it's the private sector. We need private initiative. We need investment to come in big. And for that, there's many things to do. But I just want to say that I feel like those countries that will lead the recovery will be the ones that manage to have stable rules and a good environment for investment levels from the private sector coming forward. Over to you, Anabel.
All right, thank you very much, Felipe. And we'll get into more detail on this last point that you were mentioning. But thank you for framing the situation, this dire situation in Latin America at this time. So, Barbara, I want to invite you now to share your views on this initial question, please.
Great. Thank you so much, Anabel. I'm so happy that you invited me to share in this panel. Um, I probably should have thought how daunting it is to share a panel with one of the people who knows the most about trade and competition in the Americas and one who knows the most about macroeconomics. But I'll try to make a little bit of a contribution. Absolutely agree with Felipe. This is really a bad year for Latin America. It's a bad year for the world, and it looks as though it's twice as bad for Latin America. I think that your listeners and your viewers have probably been following Latin America for many years, and the fact that this is the deepest recession in recorded history really does focus the mind. The fact that so many people are going back into poverty after these really hopeful gains and some very good programs and policies is a terrible thing, and hopefully we'll be able to take advantage of the opportunities that the crisis brings about. But that's going to be a lot of work. In terms of trade and investment are essential for Latin America. And as you said, there are three main factors going against the current trade picture in Latin America, one being the decline in demand. You mentioned concern about what's going on in the major markets, China and the US. And so many countries are so dependent on what happens in both the US and China. And really that affects, and there's not much that they can do about this, right? This is a fixed external factor. There are also the supply effects. Supply chains are changing. I know there's been a lot of work done at the World Bank. Peterson has thought about this. A number of think tanks and analysts are thinking about this, but we don't really know how supply chains are going to reconfigure. This may open up some opportunities, and it's already opened some opportunities for some Latin American countries. And hopefully those opportunities can lead to new pathways, but it also causes a lot of confusion, a lot of consternation, a lot of disruptions, particularly for small businesses. And that's of concern, particularly when you pair that with Felipe's point that Latin American governments haven't been able to do the same sort of stimulus, the same sort of support for particularly small businesses, which are such an essential part of the backbone of the Latin American private sector. And so that's of concern. Another concern is the price effects. We've seen really weird prices, and I know Peterson has done a lot of work on this. But for Latin American countries, which are traditionally commodity exporters, this affects them disproportionately. And so these are old trends that are going to continue to lead the fate of the region. And that's mostly for goods. The services sector, and you know this sector very well, had been growing rapidly. It's been growing rapidly in importance in the region, but it's shown pretty mixed results. And overwhelmingly, those results during this pandemic have been negative because of the region's serious dependence on travel and transportation, which take up about more than half of services exports. And so that, of course, is of concern, particularly for the countries of the Caribbean, who depend from 50 to 80% on tourism. But if you look at the services sector and if you disaggregate a little bit, right, there are some opportunities to leverage trade and investment for the resilience that you asked about. I'd argue that this is really an opportunity to diversify into sectors that you're seeing growth, such as business information technology services, telemedicine. Latin America has done pretty well in some cases attracting medical tourists, right? If the digital technology in some cases is picking up to this, and that can bring about some additional opportunities, distance learning, teleworking platforms. We've already seen some really promising digital innovation in LAC from a number of growing and agile fintechs. And so I would say that, these are some promising green shoots, but in order for these to develop and for this to bring about the results that you really want to see, Latin American countries have to get their digital house in order. And that means a couple of things. One, it means investing in the appropriate infrastructure. So, really investing in the infrastructure that's going to bring digital gains and digital opportunities to all. Right? It means taking efforts to bring about financial inclusion really seriously. It also means that Latin American governments shouldn't give in to the temptation to use trade protectionism to buffer themselves in the short term, as they have in the past when we've seen crises of close to this magnitude. And that's particularly true in the sectors related to digital trade. And these are more difficult to identify. It's much more difficult to look at a regulation that's distorting than it is to look at a tariff or a quota. And they can be, there are many reasons for that are set out for protecting some of these sectors. Governments really need to look at the costs and benefits, and they really need to think about the opportunity costs, because the opportunity costs can be as large as cutting Latin America off from real potentials in trade and investment. In investment, colleagues at the World Bank have been working to bring efficiency-seeking investment to countries in Latin America. This is investment that is drawn to competitive sectors. And it's investment that tends to produce more jobs and bring more technology and have more offshoots. And bringing the digital economy more up to speed in Latin America is really important in terms of bringing and then maintaining that sort of investment. Felipe mentioned the disappointing growth, and this is something that has bedeviled many economies for a while. Felipe's colleagues at the World Bank last year in the World Development Report looked at the costs of digital protectionism, and they found that removing restrictive data policies can gain countries on average about 4.5% in product. The last thing that Latin America needs is to productivity gains. So the second message would be to really not give in to protectionist impulses. And the third message, Anabel, before I pass it back to you, is the need to rekindle regional integration. And you alluded to that in your remarks. Digital trade works best when it's up to scale, when apps can work in an interoperable manner. The more customers you have, the better you can perform. And so Latin America has decades of working towards regional integration. I think it's time for regional integration with a forward-looking digital trade agenda that can ensure that Latin America will increase its standards and grow trade and draw FDI. So thank you very much.
All right, thank you very much, Barbara. A lot of topics on the table, I think, and thank you for bringing them in. So I probably would like to start with this point on supply chains, on Latin America's participation in global value chains and regional value chains, because Felipe alluded that if growth is going to come back to the region, it will need to be a private sector-led growth. You referred to the point, Barbara, about countries in Latin America needing to attract more efficiency-seeking investment. We know that global value chains, or a lot of experts are talking about global value chains being reconfigured. We have a question here from the current executive director of Brazil at the IDB, Jose Reis, and also a former bank colleague. He says, some analysts are expecting important changes in organization of value chains, of global value chains after the pandemics. So he asks, do you think Latin America could benefit from a reshoring or a nearshoring process? And what role could multilaterals play to support this process? And let me also ask you, Felipe said, related to this question, Felipe said a few countries in Latin America, certainly the case of Costa Rica, my country, Mexico, maybe a bit Chile, have been well integrated into global value chains. But should these new opportunities arise, is Latin America ready to tap into these opportunities? And what should it do to actually be able to benefit from these opportunities? So Felipe, let me maybe start with you, and then I'll come to Barbara as well.
Thank you, Anabel. So I think that's an interesting point, and thank you to Jose Guillermo Reis for raising that point. I think it's still a bit speculative and hard to know exactly what this new configuration and nearshoring and all of these things that many of us suspect might happen, because there's too much uncertainty around what COVID has created. But I do sense that there is something cooking there, and I really would hope that Latin American countries can this time be a lot more proactive about latching on to any opportunities that open up in this realm, because I think attracting some strong investment, FDI, or local investors to participate in these opportunities will not just generate jobs, but will generate more dynamism and growth, which is exactly what we need. I think the big question is going to be what will be different for Latin America to be attractive this time. Clearly, Latin America was not attractive last time. Why would companies bet on Latin American economies this time? And I think this goes back to the point of critical reforms and critical issues that affect competitiveness generally in the region. Because I do think that ultimately it's not just about saying, coming out with a policy saying we're now open to global value chains, we're now open to, putting a big sign, open to do business. You actually need to create the conditions. The investors will come when the production costs and the overall environment is conducive to that investment. And I think that's where Latin America still has a big agenda. And that's where I'm hoping that in this rethinking, countries will realize that there's things that have not been addressed that need to be addressed. I'll mention three that I've been highlighting in my early conversations, and all of them I think are well known, and they more or less cut across. Each country is a little different, but I think they cut across Latin America. So number one is the quality of education, which I think we have generally solved the problem of access for the most part, but now the problem is that our systems are not producing the quality graduates that are needed to really participate in some of these value chains. That's number one. And number two is labor markets and labor regulations. I've been actually pleasantly surprised, although I don't know where that's going to go, but this pandemic has really brought that forward in so many countries that I've been discussing with leaders, that suddenly, companies say, look, I have no way, if I follow the rule of the law in our country, I either have to declare bankruptcy and lay everybody off, or that's it. I really don't have an option if revenue is not coming in. We do not have very flexible labor regimes, and I have seen some encouraging discussions about trying to make this more flexible, so that companies can preserve as much as possible the employment. And I think that's something that has been a barrier to investment in the past. Very rigid labor regulations. So updating this so it's more in tune with what's going on elsewhere would be important. That's number two. And then number three, I would say competition. We still have in the region a number of sectors and subsectors that are just heavily protected, either very formally and openly or very informally and implicitly. And so there's vested interest, and there's rules, regulations, and it's whatnot that really discourage competition in some critical areas. Trade, if we were much more open to trade and would be able to introduce competition to trade, that would be very welcome. So I think that's absolutely critical to think through that agenda. And then maybe I'll add, so those are my three, but I'll add, and I would just agree very much with what Barbara said on the digital side. I think it's very hard to think of of being a modern economy and participating in dynamically in global value chains if you do not have a strong connection to the digital agenda. So the countries need to be very well connected. They need to be able to develop new businesses around the digital. So I think that holds a lot of promise. I'm still not, I don't think we have strong evidence to know exactly how, how employment intensive this will be. But nevertheless, I think we need to give that a chance and see what can happen and make those environments conducive. Over to you, Anabel.
Thank you very much, Felipe. I think you make very important points as to what does the region need to tap into the potential reconfiguration of global value chains. I want to come to the digital a bit more, but I'll do that a bit later. Let me first bring in Barbara to ask you, do you think Latin America will be able to insert itself into global value chains in this post-pandemic world?
So I think Felipe made really good points, and I would just dig a little deeper into one and add another factor that I think is really important for the region to do so. On education, I mean that's absolutely right. I would say in the short term, before an all educational reform, targeted training. You probably need fewer philosophers, lawyers, and with apologies to Peterson, and I'm one myself, economists. But you probably need more cybersecurity experts. You need coders. You need innovators. You need the ability. And here, the culture of work and the regulations around jobs. Felipe, you're right that maybe a lot of these investments won't bring jobs per se in terms of the companies coming in and employing people, but they will give offshoot opportunities. And so you need an entrepreneurial spirit where people can feel comfortable doing startups and failing. And that's one thing that is very difficult to do in many of these countries. Perhaps a little bit easier and perhaps more driven by governments is you really need to work on logistics still. And I know that we've been talking about trade facilitation for decades, but the agenda is still open, it's still uncompleted, and it's just more essential than ever as we turn more towards e-commerce. It's really necessary to get the number of documents down, the number of days waiting at borders. The region needs to be resilient. Jose is right that the reconfiguration of supply chains offers some opportunities. We've seen that in Brazil already. You hear companies thinking about China plus one and US plus one or plus many strategies. And so Latin America needs to be poised to take up those opportunities. You need to deploy your export promotion folks, your investment promotion folks around the world to gather intelligence on where those opportunities exist and communicate the benefits of locating in Latin America. And there are many. And at the same time, make sure that you mitigate the costs to doing so with these reforms.
Now, thank you, Barbara. One important aspect of being able to tap into these new opportunities, aside from the domestic reforms that are required and that you both well referred to, is the external environment. And here, I think we have a question from Nicolas Lloreda, who says, with the US promoting protectionism and most countries in Latin America pausing on trade liberalization, who can lead on free trade and integration in the region? There's also another question from Javier Gutierrez, also looking at, how can regional or interregional trade help the region recover from the pandemic. So there are a number of other points that are being made by our viewers who want to know what role for trade integration. We know this is a pending signature for most parts of the region. So I'd like to hear your views on this topic. And maybe let me start with you, Barbara, this time.
Sure. And I mean, that's such a good question. And of course, to those who have been following the world trade system, it's a frustrating time. The big countries are not behaving in a way that's going to help everybody else recover. There are a lot of distortions in the system, and I think the faith and your colleagues, Chad Bone and Samaya Keynes, have had some nice podcasts on the future, including with you, on the future of the World Trade Organization. Um, so there are a lot of barriers, there are a lot of uncertainties. And Nicolas, maybe this is a time that Latin America could raise its hand in leadership. The region really needs to increase its trade penetration. It really needs to increase its regional integration. Um, there are, of course, many challenges, but I think that working in partnership with other, and I hesitate to use the phrase like-minded, but I can't think of a better one, but with other, countries that see the value in doing this, um, perhaps move forward an international agreement, a digital advancement trade agreement, for example, or a trade agenda, in which we look at, what are the barriers that need to be brought down in order for countries to be able to take advantage of digital trade. A lot of barriers remain domestically, but there are also many barriers in terms of differing regulations, differing visions, um, and restrictive measures in big countries that prevent the ability of the mid-sized and smaller countries to move forward. The e-commerce talks in the WTO are still moving forward. You could see if you can inject some life into those. It's unlikely that you're going to be able to do a big, revamp at this point in time. So I would pick the agenda that's the most compelling. And I think right now, particularly with the pandemic, the digital trade agenda is one. In Latin America, you have countries that have signed really world-class digital trade agreements. Mexico with the USMCA, Chile and New Zealand and Singapore just signed, I think in June, their DIPA, the Digital Economy Partnership Agreement, that has room for others to join in, and also has room for other, it doesn't include all of the provisions that can really bring about these benefits, but is flexible enough that those could be brought in. So, if sort of forward-thinking Latin American leaders want to lead on the trade agenda, it seems like a good time to do so.
So thank you. Interesting point that you make, Barbara, that maybe this could be the time for Latin America to lead on some of these issues. We have this question. We got a question in our audience coming from Ricardo Melendez Ortiz, a friend who we know as well, who says, how can the World Bank assist in fostering and proactively reigniting regional integration within Latin America? And I think this also comes with another question that I received actually before the episode started from Eric Farnsworth from the Council of the Americas, who says basically, so this is as Felipe was saying, there is an opportunity in this crisis, and he basically says, why not bet big on a new hemisphere-wide trade agreement based on democratic values and market principles rather than geography, and using the 2021 Summit of the Americas as a venue to launch it. So a lot of concern, a lot of questions about regional integration. How can we do more? And is there an opportunity for a hemispheric agreement on trade and investment? Felipe, what do you think?
Thank you, Anabel. Okay, so that's interesting and a bit speculative, but I like the question. So let me say two things on that. The first one is the simple point that I think all the analytic work that has been done in this area tends to show that the better free trade agreements, the better trade agreements in terms of spurring growth, investment, job creation, tend to be the deeper ones. And I think there's been quite a bit of academic work, and I think you have participated in this, Anabel, to show that, when you have one of these deep agreements, say, between the US and a Latin American country, or the EU and Latin American countries, it's not just trade. It's just a lot more than trading goods. It's also trading services. It's also the chapters on environment, the chapters on sanitary and phytosanitary, is the chapters on intellectual property rights, and all these things that come embedded. I just, many of you probably don't know, I've just spent the last couple of years living in Kenya, and managing the East Africa programs for the World Bank. And Kenya has started negotiating. I think it's the first sub-Saharan African country to negotiate a free trade agreement with the US. They are in the midst of it as we speak. And those trade agreements generate a big buzz across the economy, and generate a lot of work and excitement, and a close examination of regulations in many areas. And if hopefully it will come to an agreement, it will require that Kenya will revamp its regulations and government capacity in quite a number of areas to make sure that this trade agreement actually can be implemented and yield its fruits. So I am very much a fan of those types of deep trade agreements, because they do have a lot more punch than a trade agreement between, I don't know, two small countries, or that are both middle income. Having said that, I do not want to discard, and I do think that it is important. The region still has very little trade across some of the borders, not all. And I do think that it is good to continue to promote regional integration. Eric's idea, I think is fascinating and interesting. I think we'll need to mull it over. I'm thinking that we should probably wait until December, because it's always good to make big New Year's decisions around Christmas time. That's the only reason I'm proposing to wait until December, and I won't say more about that. But I think anything that generates energy and enthusiasm and a common agenda will be positive, and that could be an interesting one. My second and last point is on this is, and I'm picking a bit on what Barbara was saying about services. So I think part of the floundering of some of the trade initiatives in LAC has been because policymakers and don't want to step on the toes of some powerful vested interest, as I was mentioning, lack of competition and all of this. So the services part of the economy is interesting on this, because a lot of it would be new. So you would not be stepping on somebody's toes. It would be new digital, digitally transmitted type of services, and a lot of this would be new. And a lot of it, as Barbara said, it would be open to new creative innovation, entrepreneurship, and I think that would be very good. Now, the service sector in LAC actually has been growing a lot. And some of our studies show that it is becoming by far the largest source of employment and growth. And that has its pros and cons. The big con is that the productivity of the service sector as an aggregate is relatively low. And certainly in the industrial sector, and particularly the exporting industrial sector, tends to have much higher productivity. So we do have this big debate about whether we are deindustrializing too early. And there's a big debate about that. And maybe this is a teaser for the flagship report that LAC, our unit in Latin America, will produce for the annual meetings in October. We will be looking at the structural transformation and the tensions between the productivity and the services and the manufacturing. How much deindustrialization? Is it true that Latin America just has failed to follow the path of the US and the European countries in that industry has just reached a plateau and is now actually moving down in the share of employment? And there is some truth to that. Services is taking off. But I think my final observation on this is services is a hodgepodge, is a very heterogeneous basket of activities. And some are very attractive and very interesting and are actually high productivity. There's finance, there's logistics, there's telecommunications. They're much more productive and even skill intensive than manufacturing. So I think there's some very interesting opportunities there for trade in this side of the services sector. And if I were a Latin American policymaker, I would try to quickly latch onto that, because it would be a bit easier on the political economy side and might even give some leeway to then take on some of the other battles while opening up opportunities in this side of the equation. Over to you, Anna.
Thank you, Felipe. I think you point to several interesting aspects. One is the role of deep trade agreements in underpinning global value chains, which I think is a very important aspect, and one where there is more work to be done in the region. A second point that you were mentioning is sort of the productivity impact of the services sector, and I would like to add to the point that you were making the role of what we can say modern services. Business process outsourcing, information technology outsourcing, knowledge process outsourcing as well. Some activities, and there are pockets, I think, happening in Latin America where countries are beginning to export these modern services. In Colombia, as we know, for example, is an interesting case. In Argentina as well. So maybe, and I'm really looking forward to this flagship report that's going to come out in October, because I think this is the whole topic of structural transformation in Latin America is definitely one that merits a lot of consideration. And we've had a number of questions here on sectoral issues. Christine Chang from the World Bank, also a former colleague. Dorothea Lopez also asking about services. Christine about regional value chains. Elaine Huang also wanting to know what are the sectors that have opportunities in Latin America. And we've all been talking a lot about digital. And I know, Barbara, that this is a topic that you are very much involved in. You've done a lot of work in this area, and you have paid close attention to the digital economy in Latin America. So what is it that Latin America needs to tap into digital trade? You mentioned infrastructure, but what else? What do you think about institutional frameworks in the region?
That's a really good question. And I think, Latin America over the last 5 to 10 years has really started to have, maybe the beginnings of a transformation. And policymakers, to a certain extent, have been keeping up with this. So you see a number of ministries of digital economy. Colombia has done a great job in this. Peru. Ministries are also, looking at digital strategies across units. And so the Competition Authority is working with the Digital Economy Ministry or whoever is in charge of that. So there is an interest and a willingness to be part of this transformation. And so I think that is a very good and positive sign. There are some worrying signs of, whether for protectionist reasons, maybe some of the young startups are starting to become incumbents, and so there seems, or in reaction to the pandemic, some signs of digital protectionism. I really think that needs to be paid very close attention to. I know that the World Bank is working on this and is looking at the societal impacts thereof and the impacts on things like small economies and private sector development. So I would say, Felipe, keep up the good work. I think that the World Bank also, having Felipe, the Vice President for Latin America, is a very smart move, both in terms of just the knowledge that he brings, but also from his experience in Africa. So in Africa, you see, Felipe, you were just living in Nairobi, which is, the mothership of M-Pesa, which has done a lot for both the perception and, the spread of fintech and of, a certain amount of financial inclusion in East Africa. They're now trying to figure out how to enhance the cross-border aspect thereof, or having to make some changes in policy. And so those lessons will be very helpful as you look in Latin America. Infrastructure still, the internet penetration is still not as good as it needs to be. It's grown a lot, and so the work that needs to be done to really get where is necessary is not as difficult. But policymakers should focus on that. They should focus also on, the education that's going to help amplify these opportunities, which we've mentioned before. You're also starting to see in external policies countries taking this seriously and thinking about how to become more a part of cross-border digital flows. With cross-border digital flows, I think McKinsey estimated that these generated close to $3 trillion in value from 2014 to 2019, which is pretty impressive, and with a growth rate of amazing capacity. Latin America needs to become more of a part of that. The Pacific Alliance is starting to develop a regional digital market. Countries are negotiating agreements that put into place digital chapters. There, I would say, what's important there is also to make sure that they're signing on to high standards that will make sure that they can connect with growing sections of the world. Perhaps rather than focusing exclusively on Europe and the United States, also look to Africa and East Asia for models of resilience and of fast developments. But be careful about the digital protectionism element, I would say.
Thank you, Barbara, for your comments. We also have Shrikar here, who reminds us about the potential of e-commerce for digital inclusion. So this just adds, I think, to the points that you were making. Yes, yes, Felipe, please.
If you don't mind, can I just make a couple of very quick points to second and reinforce, I think, what Barbara just said. I think as she said, I think the digital offers opportunities for leapfrogging. This is the way they see it in Africa, and you do see a number of things happening there that you would not expect in local countries, just because it's a completely novel technology. As I was saying, it's just new businesses, new services that are not stepping on anybody's toes, and it also involves youth and people with fresh minds, and it definitely is a huge opportunity, and Latin America needs to get into that action. But I do want to make a last point because I feel strongly about this, and I think it's on this point that Barbara mentioned on access. We should not overlook the fact that Latin America is lagging behind in broad access of the population to broadband and the internet. I mean, I've been asking for the numbers, and I've been really stunned to see that in most countries it's barely 45%, 50%, 55%. So, I mean, it is a huge concern. As we speak, 50% of the population is being able to carry home-based work, is being able to keep their kids through some tutoring because they have access to they have access to financial service through their connections. The small entrepreneurs, they can sell their goods through e-commerce, and they have, but half of the population has no access. So what is happening as we speak today is extremely worrisome, which is that the inequalities that are being deepened, the historical inequalities of the region. Unfortunately, I think this is going to be a horrible year for inequality in Latin America. And I think we can't just let this sort of see how the market takes us. I think coming out of this pandemic, and I would say we have to act today, tomorrow, governments really need to have a very aggressive policy to make sure that universal access to broadband is something that happens very quickly. If need be, subsidies from the state, whatever, but we cannot have half of the population missing out on these opportunities. I think it would just add to the fire of unrest and social problems in the region. Over to you.
Well, this relates precisely also to another question that we have from a colleague in the Atlantic Council, Maria Fernanda Bosmosky, who says, how can Latin America focus on the digital economy and trade where there is so much informality? Which is also another dimension, I think, the point that you were making, Felipe, which is, what are the conditions for the digital economy to actually flourish in Latin America? And it's really, I think, a combination of factors that again looks into domestic reforms, domestic priorities, quite frankly, domestic reforms, investments, private sector-led growth, and then, the external framework. What kind of rules framework are we going to have to foster regional trade, but also the broader multilateral trading system and the importance for certainty in business certainty for the region. So a lot of challenges, but I want to bring in also one additional point, which is also very important for the region, for a quick comment from both of you. We have Kent Jones from Babson College, who is concerned about whether Latin America could come together and look at having some kind of international agreement on disease prevention and trade cooperation. We know that the region is being hit by the pandemic. And we know that's important to have access to test kits, to therapeutics, to vaccines. So can the region or should the region come together to look into an agreement to help fight the coronavirus? Is that feasible, or should the region look broader? So Barbara, quick remarks from you, and then Felipe. And with this, I think we will be closing our episode today.
Well, I think that, obviously the region should, at the very minimum, pledge not to put any barriers, either export or import barriers, to health-related goods and services. The region should come together. The region should also come together with other regions. The question there is politics. Is that feasible? And I don't think that I'm in the position to make that judgment call. But I suspect that that's trickier than the question of should, or the question is whether it's economically or from a public policy perspective desirable. This maybe is, gets to some of the same questions from Eric Farnsworth's proposal for a modern FTAA, and perhaps these scholars could merge the two and have this as an important hook in a modern FTAA. I would say that these sorts of agreements always have pros and cons. They're always it's more difficult. It's good to have ideas, and I think it's an ambitious idea. I think it's a necessary idea. But then the proof is in the negotiations and whether countries are willing to get together and to do so. I hope so. I think that would be great. On the modern FTAA, Eric, I read your piece. I thought it was a very interesting, very ambitious. I would love to see what that would look like. Obviously, we're not going to go back and get the documents from the FTAA that we started, Anabel, many more years than I'm willing to admit on camera. But although there were some seeds in there, we had one of the first electronic commerce negotiations. There was a lot of work on trade facilitation. We called it business facilitation then. So yeah, perhaps for a next edition of Trade Winds, perhaps you can think about that.
Thank you, Barbara. Felipe?
Thank you, Anabel. So let me say, I think that's a very good point, and it's something that should happen. But let me say a couple of things on that. The first one is I'm disappointed generally in all my conversations about how little dialogue is going on within the region about how to deal with the coronavirus. Everybody's dealing with the same virus. But I sense that the countries have become very inward looking on this, and there's just not enough sharing of experiences and trying to deal with this on a more Latin America wide level, or at least the groupings of countries. It's become very much a national issue, a national problem, and I think there's some huge missed opportunities going on. I'm also disappointed that I'm beginning to see even some potential trade protectionism coming out of this. I've already heard of several shipments of exports. I won't name countries, but the stated reason for rejecting the shipments is because they're infected with coronavirus. And that's I don't know. Maybe it is true, but it's a big concern that this kind of disease will become now an excuse for some protectionism. And then my final point, and to end on a more positive note, I'm just reading over the last 2 or 3 days. I think this is a very interesting announcement that was just made in Mexico by AstraZeneca, Oxford University, and the Slim Foundation, because they are agreeing to a very big deal to produce and distribute the vaccine that seems to be, I think it's still in phase 3, but if it comes out to be a good vaccine, it would be distributed across Latin America. And both the World Bank, the IDB, we have been in talks trying to see how we can ensure that whoever hits on the jackpot of the vaccine, it will actually have a distribution into Latin America. And I was very happy to see that it wasn't just Mexico. It's not Argentina is also a part. It's not just Mexico and Argentina. They want to make it available for all of Latin America. And I do hope that that's the beginning of more collaboration in this area.
Thank you very much, Felipe. And this has been a wonderful session. There are so many challenges that the region is confronting. But my main takeaway from this conversation is that this is really a time for the region to rethink its growth strategy in going forward, and that there are significant opportunities to be leveraged in the areas of trade and investment, provided that we can come together with the domestic reforms and a conducive external environment. So with that thought, I want to thank very much again Felipe and Barbara for being with us. I always like to leave the door open to bring you again in the future to continue our conversation, as a lot of things will happen, or we expect will happen in the month to come in a number of these areas. I also want to thank our audience. We had some great questions from you. I'm going to share all questions with Felipe and Barbara so they can also reflect upon some of your thoughts. So thank you very much, and please keep coming. Thanks to my colleagues also at the Peterson Institute for making Trade Winds possible. And please stay tuned for the next episode of Trade Winds on Wednesday, September 2, with former USTR Carla Hills and International Chamber of Commerce President John Denton on how to reform the WTO to support growth and jobs. So until then, thank you very much and goodbye.